Hi, everybody. Once again, welcome to Westchester Talk Radio, and we are once again with our friends at Hightower Westchester. We're here today with Richard Flahive, Chief Investment Officer and Partner at Hightower Westchester, and today we're talking about how to get started in ESG investing. We've discussed what ESG investing is in the past, but it might be a help if our listeners could hear us revisit the definition and the space at a higher level. Richard.
Yeah, no, thanks, Bob. Always good to see you.
Always good to see you, sir.
Yeah, we've gone over ESG from a high level in the past. I think what I want to kind of address today is, how do you access the space? I'll obviously start as kind of addressing what it is again, but ultimately we want to kind of get that across to investors. Listen, it's been around a long time, but just in different iterations. SRI, which was socially responsible investing, has been around a long time, as well as kind of exclusionary investing, which you're probably familiar with, right? Excluding tobaccos or guns or alcohol, things like that. Or on the other side, seeking out companies, right, that are either in social justice or environmental sustainability. So, this is just, I think, furthering really these integration of the environmental, E, S is the social, and governance is the G, factors into traditional finance and investing, more to really identify potential risks and opportunities just beyond kind of balance sheet technical valuations. So, it's only grown in popularity, not just in popularity, but also just in investment assets as well. So something, we've been doing for some time now, but wanted to really get across to, prospects and clients as well.
Well, ESG investing seems to be on the forefront of many investors' minds. Where do prospective investors start?
Yeah, I think a good place to start, and we always kind of open with this question is what's your criteria? What are your values? What are you looking to get out of investing? I mean, some clients have come to us and said, listen, I'm not even interested in ESG investing. Just make me, money, and I'll do what I like with it on the back end in terms of philanthropy. Whereas other clients, is it just to feel good? Is it better you want clean water? Do you want diverse boards? So coming to us or thinking about those ideas, and it doesn't often happen day one. We'll talk to clients and really educate them in building out an allocation that is aligned with their values. But ESG can be really broad in nature, as I said, whether or not you want a broad-based ETF, which just surrounds ESG in general in the large cap space, or you can even buy specific bond issuances around green energy or something along those lines. Examples are like I said, screening and inclusion or exclusion. Tobacco, guns. There's thematic. The clean energy side is a big one, and then there's impact, right? If you wanted to do water projects in Africa, so it's kind of starting with all these in mind and then backing into an allocation. The space has gotten a lot deeper, from offering standpoint. So, it's really important to identify what's important to you, your family, your foundation, and then we can express it through the investments.
How does Hightower put together a portfolio for ESG as opposed to what you traditionally do?
Yeah. No, it's a great question. I think it's a question that the industry is asking, right? And I'd start with we design portfolios with an emphasis on quality and strong financial and long-term success. And whether that's traditional or ESG investing, those pillars will never change, right? So it has to kind of pass the mustard on those higher levels. But as this has evolved, our clients' really needs have evolved, right? And they're now understanding that, hey, I can get both performance and my values expressed through my investments. Let's kind of build that out. The big thing here too, you have to remember is, the institutional sector has really been the driver of this. And generally, when the institutional sector is first in something, retail is to follow. So I think we're kind of playing catch up in a sense. And by institutional, I mean obviously the bigger asset managers and things like that. But for selecting funds and spaces, it's investment performance, as I mentioned, and then the ESG research kind of comes on top of that, right? So what are their proprietary data analysis? How are they getting their research? What sort of data providers are they using? What are your policies, your procedures, your track record? Don't forget your voting proxies too on the back end of this, right? So if you have a vote for through a company and a proxy vote, you're voting on behalf of your shareholders to have diverse boards, to eliminate emissions, things like that. So, we'll look underneath the hood to see what type of engagement, they're participating in. And then ultimately the impact, right? As I mentioned, those various different sectors. But, I will say it's a bit difficult to do on your own. There's a lot of proprietary data that we pay for and that we utilize that's not readily available, on whether through a Google search or something like that.
What about greenwashing? It's become an issue. Can you talk about what it is and how Hightower Westchester avoids it?
Yeah, and this is as you know with everything, right? As something rolls out, there's going to be good actors, bad actors. It takes a while for that to kind of work itself out. Basically, it's just they're spending more time and money claiming to be green than actually being green in a sense. They might not fully be what they say they are. And what you're seeing is, a lot of new entrants to the space, right? Whereas we focused more on tenured, managers or firms that have done this for decades. Now that it's kind of the quote unquote, soup du jour, it's, we've always done it. Hey, this is what we do. And they're just slapping those three letters onto a fun name, when in all reality, they're not, right? This is where, as I said before, having someone who can actually dive into the company and what they're doing and how they're doing it really matters, because, there's been a lot of, call it greenwashers out there.
Oh, yeah.
Who have, listen, I mean, we all know the impact this stuff can have on fund flows and things like that. It's been in their best interest to tag those letters on, but you want the actors that are actually doing the right thing. And, that generally comes with a couple of years of experience. So.
Wow, that's interesting. It's almost frightening in a way. All right. ESG investing continues to grow, Richard. Can you touch on the biggest changes and misconceptions that we've witnessed?
Yeah. And I mentioned earlier, data is one of the biggest ones. And how you not only get the data, but how do you analyze it? So there's several different data providers out there. And there's several different scoring kind of mechanisms out there. So you can be a 4 out of 5 globe rating, or you could be a 3 out of 5 star, whatever it is, right? Or they're giving you a percentage on how quote unquote ESG you are. Well, who's to say that's the right definition of ESG, right? And I think you think about fossil fuels as a good example. In all reality, are they socially conscious? That's a tough one, because you look at what these management teams are now doing when it comes to green energy. There's a significant portion of R&D and CapEx that's going into green energy across some of the biggest, call it oil or fossil fuel companies out there. So, all of this whole defining and having data, clean data around it has been the biggest challenge, and it's only getting better. Walmart's another example. Mm-hmm. They're one of the larger sellers of ammunition in the whole country. That equates to less than 10% of the revenues. Should that qualify as an ESG company, right? So these are all the things that we have, spoken with a lot of the funds on to understand. Okay, what type of? Oftentimes they're taking data from a lot of different sources, using some sort of proprietary risk analytics and filtering through it themselves, which is what we like to see. But I think the big thing is just the weight behind it, like not just the assets, but the people. I remember going to conferences 5, 6, 7 years ago, and it was in a small, little auditorium. Now there's conferences at the UN with thousands of people. The big asset managers are all sponsors. This is when it's kind of gone mainstream. And I think, even like I said too, a lot of the traditional funds who didn't have ESG are now incorporating these kind of risk metrics within and disclosing their scores, because they've always kind of incorporated these things and now they want to show it. But I think the biggest thing is returns. You're not sacrificing performance by investing this way. There's just different risk metrics that are going on top of what has already been built out, right? Listen, I think we all know, the less, less involved you are in, let's say, emitting, carbon emissions and things like that. If you're someone, a company like that, that might help you longer term, whether it's because of litigation or whatever, right? You're avoiding these other aspects of things. So I think it's an important piece of the puzzle. But between you and me, Bob, I think when we fast forward 20, 30 years, quote unquote, ESG isn't its own standalone. It's all worked into everything we do kind of on a daily and weekly basis. So.
Wow. A lot of us did not realize the emergence of this sector and how it affects us. Well, we're nearing our time, the end of our time together, Richard. Do you have any closing thoughts about this?
Yeah, I think, you mentioned not knowing. I think that's a big part of it. I think you're seeing it more and more. I think, asking the question as an investor is something important. We'll often, not bring it up for whatever reason. Sometimes it doesn't get talked about. And I think us advisors and money managers out there all fall victim to that. Listen, it means a lot of different things to different people. It might not be for you. It might be for you. I think when you look at, like I said before, the largest investors of the world, the endowments, the foundations, there's a focus there. They've every year, it seems to be another record of inflows into the space. But you need to do your homework. I think it's important to understand how to access it, not just to blindly access it. And that's where I think utilizing someone like ourselves, a fiduciary, right? Tying this all together, it's making sure it's important to you and kind of there's that overlap there. So, any questions, obviously feel free to reach out to us and our firm about it. We're by no means the leader of the space, but, we've been doing it now for close to a decade. So obviously happy to answer questions.
Another example of all the different factors that go into investing. Richard Flahive, thank you very much. Richard is the Chief Investment Officer and Partner at Hightower Westchester. I want to thank you for being with us on Westchester Talk Radio. Have a great day, sir.
Yep, you too, Bob. Thank you.
HighTower Westchester is a group of investment professionals registered with HighTower Securities, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other information contained in this research is provided as a general market commentary. It does not constitute investment advice. Hightower Westchester and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This podcast was created for informational purposes only. The opinions expressed are solely those of Hightower Westchester and do not represent those of HighTower Advisors, LLC, or any of its affiliates. HighTower Advisors do not provide tax or legal advice. This material was not intended or written to be used or presented to any entity as tax advice or tax information. Tax laws vary based on the client's individual circumstances and can change at any time without notice. Clients are urged to consult their tax or legal advisor before establishing a retirement plan.